And now we're actually live. Perfect. All right, guys. Welcome to Deal Deep Dive Day, my favorite day of the week. We already have some hands up for those who are new. This is the day specifically dedicated to talking deals. Whatever stage they're in, could be first look, could be, hey, we need a second look at the math. You could be under contract, you could be doing due diligence. I'm always happy to run through bank statements or whatever else we want to do. But math or deal related, bring it to the call. We'll go in the order that the hands are up. We typically get anywhere from 5 to occasionally 12 deals, which we'll get through as many of them as we can as fast as we can without skipping any steps and answering all the questions that we need to answer. Quick note, because this has come up 3 times throughout the week for people. Your goal for finding deals is not finding a perfect deal. So if you're looking on LoopNet or Crexi or you're looking on the on-market stuff, keep getting the question, what am I looking for? I sat down and I really thought about it. You know what's the most valuable thing in the world to me is the actual images. Are they the properties that you would like to own? I can personally eliminate, I don't buy Class A. Class A works if you get a good deal. It's just not my thing. I don't get the same thrill of providing needed housing as I do in other asset classes. So super nice stuff, usually not interested. Is it hundreds and hundreds of units? I'm usually, occasionally am, but usually not interested. Look at the stuff that intrigues you. If you're like, hey, I would like to own this type of thing, price does not matter. The numbers do not matter for that call. You're getting connected to the broker who lists that type of inventory that you want to buy. You're going to work the deal. It doesn't have to work out. But if you're looking for like what deals do I find and which ones do I skip? Who represents the properties you want to own? That's who you're calling. That's my quick piece of advice for today, and we'll dive right into the deal deep dive. Actually, one more service announcement, and then we'll dive right in. I know I always start the call exactly 5 minutes late. That is because I don't like spending my first 5 minutes just clicking accept everyone as they come in. That is intentional. Still be here on time. I'll tell you guys that now. That does not mean show up 5 minutes late. I want to get it started on time every day. I also go notably over more than 5 minutes on, I believe, every single call always. So I will over deliver. But if anyone, I got a couple texts being like, "Are we starting today?" Yes, we are. I always let everyone in a couple minutes after intentionally. Don't abuse it. All right, Ryan, I have you first, then Dan, Steve, and Carrie, and we'll go down the line. Ryan,
What's
show
up?
us
I'll
your
go ahead
deal.
and share.
Ryan, you've gotten so close on too many deals. Ryan is due for a
We
deal.
have to,
He has paid his dues and is
I'm
ready to
trying, man.
close.
I'm trying. So this is a 9 unit. Kind of. I'm looking for 5 to 10 units really because I could take that down myself. So that's kind of what I'm going for. But I like the setup of this. I previously brought up a couple months ago an 8 unit, but it was kind of cobbled together and had a lot of worries about it, and I'm kind of glad it fell through. But this is like the kind of setup that I'm looking for. And then here's some other pictures.
Is it 3 levels with the lower level, or is it 2 levels? I'm trying to see
Yeah,
what that gated thing is.
yeah. There's a lower level, but it's like halfway underground. So I've been there,
Hmm.
and I was wondering about that, but honestly, it's not that bad because some sunlight gets in there pretty good. But so the story is current owner is a construction guy, bought it a couple years ago, put a lot of money into it, and there was a lot of vacancies actually when he bought it. And he's really just looking to get into Class A stuff. So um, he had previously had a deal structure that fell through where he was doing a partial carryback, but they overpriced it, and then the deal fell through. And I think it's just because they tried to overpromise. And he was going to carry back 100,000 at 10% interest. So it didn't really make much sense, but that's kind of like his frame of reference. So when I said I was not doing 10%, he brought up, well, they were going to do 10%, but it's like, well, it fell through. So I don't,
Yes. All we know about that transaction is it didn't work.
right. But so these are pretty accurate, and I'm still using my own calculator, and this is a MacBook problem. I would prefer to use your calculator, but I just can't download it
You're
for some reason on this
you,
computer.
You're totally fine. I'm used to looking at your calculator. I can
Yeah,
adapt pretty
right.
quick. Um,
So
oh, really conservative expense ratio.
yeah, so the other deal I'm finding out was I think they offered 600
Mm,
and I'm trying to offer a little less than that with the intent to get him at the end of the period, at the end of the 5 year period, 620-ish so that he feels like it's worth it. Um,
hmm.
so the way I propose it, and we've had a couple conversations and I've met him in person and it's off market and it's I think I'm the only one who's entertaining it right now, but I'm waiting to hear back on this structure, but it's be 550 partial bank, so 340 from the bank. I asked him to carry back 135 instead of 100, which to me it's not that far off.
Reasonable.
And then that would just by math, it would put me at this, which I would not prefer to bring that, but I could figure it out. Like I can get close to that, but I would
Yeah.
figure the rest out if I couldn't. Um, I think a bank would be about 7%. I think it might be able to get less, but I'm just running it at 7%. And then I asked him to do 6% interest only. So I threw the interest only because that would be a way for him to get 40,000 more in interest. And then I said I'd give him another 20 at the end of the 5 year period. So that would put him at 620, 625. And I think it would work at interest only. So these are the current rents. It's not a whole lot of room, but to me, it's more I'm just buying a nice property that somebody's willing to do a carryback.
Hmm.
This is trying to take into consideration going up a little bit from what he's paying, and then the rest is pretty accurate because he's given me all his bills and expenses and copies of everything. And then this is the metrics here. So double digit cash on cash. I'd like to see the DSCR a little higher, so I might try to play around with the numbers more. And then the most important thing to me is that the loan factor is less than the deal cap rate.
And DSCR, that's the blended DSCR, right? That's both the
Yeah,
seller and see, that's
yeah,
this is a highly levered transaction. And so hitting that DSCR, but you're what,
yeah,
86,
80,
84%,
86.
86% LTV?
Yeah.
That's still pretty darn strong. That's a really solid deal.
See, I wondered about that because, like, I know a bank around here will do that. I just don't, just wondered if they would like to see something higher or,
The fact that you're hitting there day one at that leverage point tells me it's a pretty darn good deal. And the bank's probably going to go for that. They're like, okay, your blended LTV, you still have the DSCR. You're right in the realm where you're likely to get the lending.
okay. Then I guess my main question is, so they, I can stop sharing actually. Um, so I slowly learn about the deal that fell through as I ask questions and try to propose things. And there's a bank locally that they were already halfway done with the deal and when it fell through and they said, well, you can just call that lender and pick it up from there. And I said I was okay with that. I didn't know what you thought about things like that.
That's pretty common. That oftentimes a broker will call and they're like, "Hey, a lender's already looked at this," or like, "Hey, this looked really promising." So I'll pick it up with them, and sometimes I'll grab a backup lender. I'm doing a refi in Houston right now, and they told me we're 60 days in to this refi. This lender, I use a reference. I like to use my own people. My partners want me to try them. He let me know today. Oh, our only loan product that we're offering is a 15-year AM. I'm like, well, that doesn't help me at all. That defeats the entire purpose of everything that we wasted 2 months. Thank you.
Yeah.
So I'm happy to take a look at whoever's already looked at it. Like, awesome. We already have a head start. Let's do that. I usually work a backup lender in those situations just in case.
Okay. The in terms of your, I think like your soft skills, and I feel like I have a pretty good gauge on it of like how to follow up the appropriate amount where you're not being annoying, but you're just still trying to like be cool about it, but just like say I'm interested in because I understand that time can kill deals.
Mm,
So like the last time I heard from him was a week ago, and I knew he was out of town. And he at the last I knew he was going to go talk to. He has a his deal is with his brother-in-law, who did the seller financing for him to buy it. So he had to like run it by his brother-in-law and then get back to me. That was exactly a week ago, and today I just shot him a text like just nothing crazy. But how do you think you should go about that without just like letting weeks go by, you know?
yeah, I usually once we have a transaction, so we send our proposal. So we're talking like once we send the actual, you sent the offer, he's considering it, and we just want to follow up that timeline.
Yeah, because there's no agents, like it can be
Yeah,
written up quickly.
yeah, and
Everything's
sometimes
convertible right now.
for the same reason, sometimes it goes slowly too. Sometimes they just take a long
Yeah.
time. Um, Stephenville 25 plex took about 3 months from when we had an agreement to it actually getting officially written up, and it was just really old seller really wanted to meet in person before it was written up, and he preferred to hammer out basically everything before due diligence. Like he basically wanted due diligence done before due diligence. So I was like, "Oh, let me show you some of the units. Let me walk you through the property. Let's come through all the problems I think you will experience when you're doing your DD. Here's my books." So he attacked it that way. It's always a little bit different when there's no agent involved. It's usually a little less conventional. It either goes really fast or really slow. I would follow up. Generally speaking, I'm probably following up every couple days. Just lightly. Like I'll send a proposal and I'll usually let it sit for maybe we'll call it like 4 days. I want to give them time to consider around day five. If I haven't heard anything back, hey, just want to make sure you got the proposal. If you have any thoughts, let me know, and then keep pushing it along.
Okay. Cool. I'll
Yeah,
keep you
I've been
posted.
I've been asking myself that same question recently though. I've been telling you guys I've been working out the Robin Hood. It looks like I will own that thing by myself. All of my partners are signing over their equity, and I'm basically just buying them all out with a note, which is not what I wanted to do, but it's better than our current circumstance. On that project, one partner has had the proposal in their inbox for 3 weeks, and it's just been pain. I'm like, guys, you either all have to sign on a new loan or you need to get off the property. We have 2 weeks. If you don't sign anything, they'll foreclose on a $4.5 million property, and that is bad for everyone. You must respond. That got a little bit more follow up than a normal one. Um,
Yeah.
to the point where I just wrote them a personal letter for my wife and I. I'm like, one of the partners will not pay their half. I am taking full financial responsibility for everyone, including the people in default. You need to sign this, or none of us are buying real estate for the next 7 years. And like magic, all of a sudden I got a response. We
Yeah.
accept the terms.
Yeah, I get every situation's different too, right?
Every situation is different. If it's critical, it's okay to bring the hammer. It's
Yeah.
like accept now, please let us progress. There's other ones where it's like, hey, balls in your court. There's no pressure. Excited to do this transaction, but multiple times a week. I'm pushing it along. I every day I sit down and I ask myself, what can I control? What can I can influence? And where will I get in my own way if I try to push this too hard?
Yeah. Okay.
And it's just kind of you do just kind of feel it out, and the more you do this, the easier it gets. But if you're looking for a rule of thumb, give them 4 days from when you send an offer. After that, every 2 or 3 days, ping them, and then just keep it moving forward.
Okay. Cool. Thank you, sir.
Yeah, exciting looking deal though. I like the numbers on it. That looks strong for what it is,
Okay. Cool.
and I really like the interiors. It doesn't look like you have a lot of work to do
No.
there. That looks like they run it well.
Yeah.
Am I safe in assuming the rents are fairly close to market?
Yeah, they are.
Okay.
It's Section 8 too.
Oh, love
So
it.
that'd be a whole other slew of questions, but I'll ask them later.
Okay. I from everything I've seen, I really like that deal. I like the photos,
Yeah.
like the building, like the location, I like the numbers. That's most of the stuff that one could like.
Okay.
I hope that works. Like the price.
Thank-
Dan.
Hey, Christian. So, let me share my screen here, not just the one window. Okay, there we go. You see a building.
Yes. It looks like an old building.
Yes, it looked worse before. So
Ooh,
this is current. This is current after they remodeled it. It's an 11 unit. It's one, and I just noticed
I
there's
liked it
cop
better up
car.
close. Yeah.
Like there's cop cars on either side of the building. That's lovely. In the listing photo. It's 1.3 listed on market. I really like how tall the ceilings are, but it is a building that was built in 1935. I really like these kind of that ceiling gap there. I'm a taller person, so I appreciate that.
Hmm.
Um, it includes, I believe, three adjacent parcels that are currently empty. Um, 83 days on market, has one unit empty out of the 11 currently, and some of them are Section 8 units.
Okay.
So I think I like it. The outside looks great, great as it can for an older building.
I would agree with
Um,
that.
this is how it looked 4 years ago.
Wow.
Yeah,
What an upgrade.
yeah. And I like this truck beside it too. That was kind of a fun touch. But yeah.
I
So
don't mention
that
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 often enough, by the way. I don't allow commercial vehicles to be parked at my properties.
so
Um,
this is actually a different property. This is a
ah,
small store there. Yeah. The property line kind of goes at the end of this grass right here. But yeah, you're right. I would agree.
yeah, and it's
Um,
just it always gives the wrong vibe. If I saw that and there's identical property next door without that, I'd really like
yeah.
the identical property more.
Yeah, right, exactly. So I put in, so it's listed for 1.3. I couldn't get that to really work.
Hmm.
I know I don't trust estimate, but just for the fun of it, it says it's worth about 1.2. I put in the calculator 1.15 and 6.75% interest, and all these numbers are based off of their current expenses roughly.
Okay.
The current, I put in 11 units here. I know there's one that's empty, but averaged all the current rents. This is the average of all the current rents. So day one,
I was
I
gonna say
took,
I'm gonna say slightly negative, and I would have been right.
yep. So, and DSCR of not even one.
Hmm.
So not
If it's cash
thrilled
flow
about,
negative, right? You have negative cash to pay your mortgage, so DSCR will always be a
yeah,
little bit negative if your cash flow is negative.
right. So let's say we were to bring it up to market rent, average market rent for the area, which is 1165. That would put us at about 2,200 a month and a much better DSCR. But there's an interesting kicker. It was last purchased in 2022 for 300,000. So I'm not sure how they can justify that increase aside from making it look better.
Mm,
And then the second kicker is I realized after talking to him a couple times, I've actually met the listing broker at a local meetup. He owns or partially owns over 100 units, and I'm thinking in the back of my head, I've been trying to get it out of him, like, why aren't you buying this? If you have so many properties, why is this on market? Why are you listing this? And yeah, I haven't figured that out yet.
um, it is always really helpful to know their motivations. It is. Um, this is where this is such a good illustration too. So the right now where cap rates are, appraised values are still coming in pretty high. The problem is it doesn't necessarily mean they're going to cash flow. Interest rates are in kind of that weird spot. I talk about this often on Deal Deep Dive days, but like, gosh, when interest rates hover right around like 6.75 to 7, that 1% rule thing is so accurate for like a round break even. I could see it on just the beginning. I'm like, okay, well, your gross rents are a little less than 1% of the purchase price. It should be a little bit negative. And we hop over here, and it was a little bit negative. Um, you have the upside. This is pretty good. I don't think I'm not seeing quite enough upside where I see where we're going to pull a return for investors is the only problem is where we head is a pretty good spot if we can get those incomes up. I don't know if we get them up enough here. $2,000 a month cash flow on a $317,000 investment. I
Yeah, it's
think
like,
I think we're probably still a little bit high on the price where it's going to work.
let's see, second. So
In today's
current,
interest rates at that price with that income, we get it to a place where I'd like to, that's around where I would like to buy it numbers wise, is I'd like to buy it ideally around that 8% and have a little bit of upside.
okay. So I forgot a big factor here. Um, no, actually, never mind. That's not gonna work. Yeah, if you think it's a little too skinny, then I'm just gonna pass on it.
I think it's a
And
little
then
tight if you're raising the funds. I think it's a little tight. I don't see where we
yeah,
get the return for investor.
sure.
If you're parking your own money here at 8%, that's a good solid base hit. I'm fine buying good deals with our own money. It has to be a little bit better if we're going to get a return from someone else and still have something left for us.
Yep.
This one that's kind of where I see this one. It probably starts to work. Actually, probably closer to that 1% number. It probably starts to work closer to like 950,000, which I'm guessing is probably less than they want to sell it for based on where they listed it. Doesn't mean you can't
Yep.
attempt, but that's I would probably just out of curiosity, if we put in the original numbers and we put a like 950 purchase price in, I'm curious what that looks like day one.
So happy to do that here. However, that is not the number I wanted.
That may be overpaying a little bit.
Did it again.
Just delete 10 and you should be good.
Thank you. So
And then what is the rental income? That's a good ending point, which I do like. So we're headed in the right direction. If we put in the day one income, are we at least positive? For the what were the actual rents at right now?
right there, 898 roughly
Yeah. Okay.
with 10% accuracy baked in. Vacancy, I meant, not accuracy.
It's still
That's
skinny
it.
day one, but
Yeah.
this is right around where it starts to work. 950, it starts to work. We're getting it starting at
Yep.
3. We have enough basis. We're gonna push the value closer to 1.3, so we have enough upside. That's where it starts to financially make sense with the incomes that it can get.
So
Uh,
that's where the problem is because I had a after one of my conversations with the listing broker who I've
yeah.
met. Um, he went and just kind of informally asked the seller, who's an individual,
Yep.
if they would be open to selling it for 1-1, and they said, no, absolutely not. I need more. So I have a feeling that it's another investor or maybe a mentee of his that's doing this. But I can't say for sure because I just don't know.
Yeah. That is one where if you know they definitely won't accept it. I usually
Yeah.
polite like I don't ever like to ghost a broker. I want to have the reputation if I do get back to people. I let the broker know, hey, I ran this number a few times and I'm coming closer to 950. You said they wouldn't accept 1-1. I totally respect that. I just wanted to let you know where I fell out on the deal.
Yep.
Just based on where it's at and where I'm at as an investor, that is going to park me right around break even on the deal, which is about the best that I can do. And that's respectful. And now this broker knows, hey, at least you'll come in and communicate and you'll put in an offer. And I know that if I'm sending you a deal as a broker, we need to have a way to get cash flow positive day one. And that is a good set of circumstances.
So let me be in touch with that broker because, like I said, he's very local, and hopefully I can do business with him down the road.
Yep. Be respectful on it. That's a good way to decline is, hey, here's where I'm at. And I know they said they would not accept less than 1,000,001. I might just
Yep.
not be a buyer for this, which is fine. If you think it's worth
Yep.
submitting, we will, but just wanted to let you know where I fell out on it. And if they ever do change their mind, I'm always happy to write this up. That's a good place to leave it.
Perfect. Sounds good. Thanks for looking at this.
Yeah, absolutely. Gary.
There. I'm gonna share my screen.
Perfect.
Okay, can you see it?
Yes, it is loading. I have the notice that your
Oh,
screen
okay.
is about to be shared. There it is.
All right.
All right,
Okay.
Mill Creek,
This
Utah.
is,
This is the one.
yeah, this is, it's for sale for 1.89. They lowered the price. It was over 2 million. And, it's a 9 unit. It's actually houses that are, divided up into, duplexes and a triplex and a fourplex. So,
Interesting.
yeah, and then it's a newly renovated. It was built in 1949. And I asked the broker if the seller would be interested in doing seller finance, and he hasn't gotten back with me. But he said he didn't even know if they would qualify for it. But I I'm gonna just try to see, well, just to see if it would even work. So I have let's see, how do I get back to that screen? Let's see. Sorry, I'm trying to get back. Okay, so I've entered um the purchase price and the down payment. He said they needed 20%. I don't know what to put for the loan interest rate or the market cap rate. But the rents are coming in pretty at market value for sure. One and two bedrooms, one bath. And I don't know. I don't know if it's too high, because I know on the east side of the valley in Salt Lake, um, the east side is the more coveted side, and people want to be on the east side, or like the east side more. It's more expensive to live over here, but anyway, I just thought I would show that to you, but I don't know. I just need some feedback, just a little bit of feedback or a lot of feedback. And excuse me for not knowing the terminology very well, but I'm
You
still
are
learning.
totally fine. Yeah, so for a lot of rentals, a lot of people looking at this may immediately think like, wow, 210 per unit. That sounds like a lot of money. Just in the fact that I buy a lot of stuff at 50, 60, 70, 80 per door. But I like to buy in secondary markets and I like to buy entry level housing. What's interesting about this, these are nice exteriors. This is more of a house style, single family, duplexes, fourplexes. They all have a higher value per unit inherently. People like
Okay.
living in these for long periods of time. So you're also in a premium market. This area, anywhere near Salt Lake, but Mill Creek, Utah, this is traditionally a more expensive area. So I wouldn't be scared by what I'm seeing here yet. What we would need to do, the next step, would be taking the income into the calculator and filling out as much as we can. Now, if it's just a first shot at it, you can pull a vast majority of the details from something like Zillow. You can plug in the property. It should estimate a lot of the stuff for you.
Okay.
But what I would do, if we scroll down this a little bit for the offering memorandum, do they actually give you anything as far as income and expenses?
Hold on. Okay, say that again. Where do you want me to
Do
scroll
they
down?
do they have income and expenses on here? Oh yeah, here financial analysis. This is what I'm
Okay.
looking. All right.
Oh,
So rent roll analysis. This is their current rent, I believe, which would make sense because they're all different numbers. So I think
yeah.
this is actual. So this is
It
as
goes
of
from,
April 18th. So this is likely accurate. This seems realistic.
yeah.
Okay, and then their pro forma. I'm going to zoom in just a little bit with my keyboard. Okay, so target NOI.
You see it?
Yep.
Okay, good.
I'm just looking around my camera here. Okay,
Okay.
so target NOI there. Let me try to come up with a price. It's still instinct is just based on the pro forma. Might be a little bit expensive still. Let's see. 110, 9, 24. Okay. So I'm not sure if this is a 6 cap market or not. It may be. I'll have to do a little bit of research on the market cap rate. However, based on their pro forma, if it was a 6 cap, which that seems reasonable,
Yeah,
it's lower than today's interest rates, but it is a premium market, so that's usually where we fall out. I put value like $1,850,000 for what it appraised for. Now, of course, that's not much of a deal, right? That's just where like that'd be buying it for exactly what it's worth.
yeah,
Um, this is me processing quickly on it, right? I don't have every single number, but this looks like they've done a pretty good job. These numbers look fairly realistic.
okay,
As a first look, this can make sense. We can also look at their current exact incomes, add them up, and replace the rental income with that for base rental income. They used 154 as the total income for year one. If we, oh, let's see here. So that's averaging an average price. I'm gonna see how much they added to their pro forma really quick. 17, 120 is their rent per unit. That's divided by 12 is an average of 1426. If we can scroll up one more time to the rents, to the rent section right above this. Actually, I might just be zoomed in too much. It might actually be visible. Their average rents are 230. Okay. They added $200 of rent to every unit, and on a valuation of a 6 cap, it's probably worth about $1,800,000 there. So doing fast math, this is without the calculator. This is
yeah,
Christian doing fast math.
yeah,
On a 6 cap, if you added $200 of rent to every unit, you would be worth close to what they're asking. Which isn't great. That means they're still asking a little bit too much. They just dropped the price. That by
yeah.
no means a deal breaker. I'm gonna check Mill Creek, Utah. This is Google's basically worthless at this, but I'm gonna check anyway. Or I'll try and chat GPT. Actually, it's gonna be better.
Okay,
Let's go chat. Mill Creek, Utah, multifamily, cap rates, class Z. Again, run this relatively quickly.
yeah,
Let's see what it comes out to. It gave me cap rates for 2022. I'm like, very, very helpful chat. Specifically current.
yeah, I know.
Oh, wow. What a great guess. Okay. ChatGPT believes that suburban Class C and Class B is somewhere around 6 to 6.25 is what I'm seeing right now. Some stuff in the
Yeah.
mid fives. 6 seems really reasonable of a number
They,
to use. So sounds like a good guess from Christian for suburban Utah around Mill Creek. So what that means for underwriting, 6 cap is probably about right. If
okay,
I'm going to take, they added $200 to. I just wish they put the actual NOI for current. That would have made my life that much easier. They added 200 times 9 units times 12. So they added 21,600 to the current to get their NOI. To save myself time, can you scroll down on their pro forma really quick? One more
yeah,
time to the bottom of pro forma. And that number was 110. So I'm going to subtract 110 from that. 110, 925. What I'm doing is I'm unproforming their pro forma. I'm using the actual income, and then
yeah,
I'm going to use a 6 cap, and I'm going to determine what it's likely worth today versus where it's going to be worth.
okay,
So 10, 9, 24, minus 21, 800 is 89,124, which I believe is about our cap rate based on what we're seeing here.
Yeah,
Or not our cap rate, sorry, our net operating income. Value, which we'll go over on Thursday's call, but value is your market cap rate, is your multiplier. So you divide the net operating income by the market cap rate, the return that an investor expects, and that will get the price that an investor would expect to pay for the property at market price. So we divide by the cap rate of 0.06 or 6%. Their value today is probably, based on our quick research here, ChatGPT and this pro forma. So it's a little bit, this is good napkin math, solid napkin math. 1,485,000. I think about 1.5 million is about what it's worth today based on what it's bringing in.
okay,
Oftentimes, for a nice, well renovated building, people are looking for somewhere between where it's actually worth today and where it's going to be worth. So I think since 1,485,000 is the number we're getting, 1,500,000 to 1,550,000 is likely where this property realistically will trade. Then the question comes, if we plug all of these numbers into the calculator, does it cash flow? Without doing the whole thing right now, I can give you a pretty good estimate of worth. It's probably worth about 1.5 million. They have
yeah,
a good ways to go. It probably will be worth 1.9 million when someone's done with this and they hit all their cool pro forma numbers. But it's not there today, and you can't buy it based on where you're going to get it to. That is all of your upside in the deal. So I think
okay,
that's about the number based on what we're looking at here.
okay. Basically, it's not the best deal.
It's still a little bit overpriced, and by a little bit,
Yeah,
I mean, $400,000 overpriced from what it's probably worth based
mhm,
on what the broker has presented here and what we know about this asset. Now, maybe it gets a 5.5 cap valuation. That's possible based on what our quick research is. So I can always multiply this back out and divide by 0.055. Could be worth 1.6 million, potentially. But again, they want 1.9 million. It's worth somewhere between 1.5 million, 1.6 million, somewhere in that range,
okay,
based on the numbers presented here.
okay. All
Doesn't
right,
mean it's a bad deal. It just means that I have to have the conversation with the broker. My next step on this would be like, hey, I was looking at their income right now, and from what I've been using to value, I've been using a 5.5 to 6 cap rate in this market. I'm still not quite there on price. But before you do that, take the numbers. You don't need every single one of these. You can summarize them, but take the total rent, take the total expenses. You can just put them all in one category if you want, just to make it easy on the calculator. Make sure that this deal is cash flow positive. That's the most important thing. Because at the
yeah,
end of the day, a bank won't finance a negative cash flow deal anyway. So if you plug it into the calculator and you're finding like, hey, we have like a DSCR of 1, we know right there immediately, okay, this is it's not bankable at this price. If they're not willing to get creative or they can't get creative,
yeah,
then price is what's going to have to come down. And if they get stuck there, every other investor is going to run into the same problem until it sells.
yeah, okay,
That's the one beautiful thing about no creative finance. I love creative finance. When no creative finance is available, you can blame the bank for all of your problems. Just like, hey, it's not my fault. I have to fit into the bank's box. If the bank says yes, I say yes. What an easy conversation to have. You throw the bank right under the bus, and then it's hard to counter as a broker too. It's like, no, you're right. It needs the finance.
yeah,
No point putting it under contract if it won't. So, yeah, that's the angle I'd take on this. But for right now, I'm guessing it's still probably pretty overpriced just based on those factors.
okay. So you're thinking, you're saying basically I should go to the broker and tell him it's about, because I just told him I had partners that I needed to discuss it with, and and he oh I guess I could use the partners as an excuse to say it's $400,000 too much.
I would do this. I would run it through the calculator and figure out if the deal works close to the price you want it to. So I would try put this in
Mhm.
the calculator and put a price of 1,500,000. So take
That's
these
fine.
exact inputs,
Okay,
put them in the calculator, use their current rents. So you can use all these performer numbers. This is fine for a first look at it.
okay,
Except for the income. Use the actual income because they provided it here. Use that instead of the rest of this pro forma. Outside of that, what you are looking for is on the analysis, how much cash flow do you actually have day one? If it's still too tight, not going to work. But then either way, your conversation is not going to be blaming the partners. Since it's bank financed, it's simply going to be okay. I ran the numbers on it based on what it's doing today. I have some concerns about where the bank would want to lend on it. From my analysis, I believe the bank is going to want to start placing loans somewhere in the ballpark of whatever price we find gets us the right debt service coverage ratio.
okay, okay. All
But
right.
I would throw the bank under the bus and I would actually run the numbers, make sure that whatever you have could be accepted. Sometimes what happens on these, it's a nice building. It's possible it goes for a premium. But what sometimes happens is you explain your reasoning and they explain it to the seller and you go under contract and you actually buy the darn thing. So the fact that it's listed for 1,900,000 doesn't mean it sells for that. My 26 unit was listed for 2.2 and I bought it for 1.6 and they didn't counter. I told them where it worked. They said, "Okay, well, we tried." And we sold it. It was that
Yeah,
easy. So sometimes you can come in under price and or they're asking and it's a yes. We're just trying to figure out what it's worth and what we want to offer on it.
okay. All right, sounds great. Thank you very much.
Absolutely. Corey.
All right. All right. So I've got a couple, but I'm gonna show you my favorite one. Is this showing up?
Yep.
Okay. So this one is freshly renovated. Problem is I've not been able to get in touch with the broker. I've also tried reaching out to the broker about a different property and never heard from her on either. So it's kind of a not great sign, but as far as the property itself, it's going to take forever to load. So it looks nice on the outside. Inside looks good. There's not a whole lot of pictures, but looking at and
Looks
it's
really solid
three,
though.
yeah, I believe it's three buildings, and I think they're all 4 units a piece. But so that's what it's looking like. And then as far as the numbers, this is based on their P&L.
Mm.
The vacancy, I just averaged all of the rents together and this is what it came out to. So there's technically one vacancy, but it's kind of baked into the rent here. I will say there are currently 2 units that are rented out for over $1,000. Um, and then Section 8 is actually over $1,200 on this one.
Okay. That's a really good indicator.
So day one numbers, it's not great,
Hey,
obviously.
hey, we're making $60.
That's right. Hey.
We'll pay
Uh,
for half a dinner in Seattle.
there you go. Uh, I put $800 here for the rents because when I was just searching online for the rents around the area, 800 is what I found.
Okay.
But like I said, the Section 8 is over 1,200, and they currently have 2 units out, currently rented for 10. Oh wait, for 1077. So
Okay.
at this, even at $800 a month,
Yeah.
um, it's not great, but it's cash flowing a little bit.
I think it
The
is fair to say you can call the one bed 1077 because we know for a fact you can rent at that price today,
Sure.
which looks
So
fantastic.
yeah. So and then if I was able to get it to that Section 8 price, then obviously it's just going to be even better.
Yeah, if you can
So
get some Section 8 in there, that would be awesome. That will help. In the event that you can't and you can only do as well as the prior person showed that you could do in these units, we know that the upside on this is substantial.
yes, and my question is that typical to see that big discrepancy for, and maybe they're just not at market rents, and I didn't see a lot in this area. So maybe the market rent is closer to that 1200 that the Section 8 is at. But is that typical to see kind of a discrepancy like that?
The of the Stephenville deals that I did, the first two rents were in the mid to high fives, like 550 or well, actually one of them was only 500 average. So 500 or 550 is around the average I bought them at. I just leased a two bed. I spent 3,000 in renovation on it, which is not a ton of money. We just leased it at 1350.
Whoa.
Right, right went up $800. So it could certainly happen. The fact that they're low rent, the rent of the building currently doesn't necessarily have anything to do with market rent. It is very possible that you could rent it a lot more. I wouldn't let the fact that it has low rents be a huge indicator. I
Sure.
really want to have a solid grasp of what things are renting out around it because it's really what is my competition able to get.
Hmm.
Um, what I would want to know, the first thing that I would want to know, we know the numbers look fantastic on paper. If we can get to
Yes.
the rents that they already have proven they can get, what I want to know is are the units that are rented at below that significantly? Do they need a lot of money rehabbing them to the same level as the ones that rented at 1,077? Or do they need or like are they pretty much the same unit and they're ready to go?
Yeah, no, that makes sense.
Just
Here's
the
their
level of
actual,
rehab, because that would add to our actual money in the deal, which will lower the cash on cash return, but we have some play here. I want to figure out how do we get this deal and buy it for 900 and get it worth that 1,433,000, get this cash flow, and how much money will it cost us to get from A to B? Because if that's our base case, and then throughout the transaction you find like, oh, 1,200 is actually possible, you make way more money, like a lot more money.
okay, that makes sense. So, I guess what I need to do is just keep looking into the market rent in the area and just keep trying to get in touch with this broker. And I guess try to just get eyes on it, like just try to see if I can go and check it out.
Yeah, where did you say this one was located again?
This is in Louisville, Kentucky.
That's right. That's right, Louisville. I knew that. I apologize.
No worries.
Um, go really quickly. Go back to the last tab. The inputs for this.
Oh, I'm sorry, the inputs.
I'm just curious if we can push to 1,200 on Section 8. I'm just curious. Oh, that's beautiful. Those are those are really good numbers. I would love to hit that. I wouldn't do my underwriting to that. I like the way that you did your underwrite. Um, let's make the mission. Are we as close to 100% sure as we can be that 1,077 is an attainable rent for your one beds? If it is, and if your two beds are renting at like 1,350 as an example, it's reasonable that your one bed should be renting at around 1,100. That's usually about how I see those fall out. You
Mhm.
very well may be able to pull this off, which means you're buying at 900,000 a deal that's really ultimately going to be worth 1,400,000 to 1,600,000.
Yeah, and the other thing is this market cap. I don't know if 8% is the actual market cap. I'm kind of guessing because it's not the best area. It's not terrible.
I think for
Um,
most of Louisville, you're Louisville. I guess I'm supposed to say it. For most of that area, eight cap sounds about right to me.
okay.
It does have growing population. It does have some crime problems. It is a pretty popular investment market. I think most investors would look at it and say that that has, as a market, has quite a bit of upside, but it tends to be a little higher cash flow market, which means a little higher a little higher cap rate. So eight's probably about right. At least it seems reasonable. You can always push that number and stress test that number, but what won't change is that cash flow. If you can hit these numbers, 23% cash on cash, your cash in and the return on it, that will be unaffected. That's a significant return. Try consistently beating that in the stock market. That's 23% is really good.
What would you recommend for like a deal on the partner structure on this? Just bring somebody in, an equity partner, and then give them like a preferred return with an equity multiple on the back end.
So you're going to start this deal because you have no cash flow in the beginning. Excuse me. You have no cash flow in the beginning, or very low cash flow, basically $60.
Mhm.
So you have no margin in the beginning. You're not going to do distributions out of no money. Everyone gets that.
Sure.
You're going to show this is where the deal's headed. So X amount of months in, we need to determine. So the real determination is how long do we think it's going to take us from get to A to B? Are they month-to-month leases? Are they on annual leases? What is our timeline? For this size building, oftentimes it's about 18 months to get all the way there. Distributions
Okay.
start once our cash on cash return exceeds 10%, and they will continue until I would put a timeline together. For some point, they're going to get a significant preferred return. Let's call it 8%. That's a good solid return. We'll split everything above that 50-50. That means when the payments kick in, the cash on cash return is going to be, I'll just round down to 23.
Sure.
You have 23% minus their 8% return that they're already getting, divided by 2. That's another 7.5%. Plus your 8, which would be 15.5. They would be cash flowing 15.5, and you'd be cash flowing 7.5% on their money without any money in the deal. That's 15% cash flow is insane. So a preferred return with a cash flow, and then at the refinance, they put in, if they funded every cent of this, they put in like $250 to $275,000. Let's assume you raise some reserve in here, but
Yeah.
we'll just call it the straight up 240. You can likely cash out on this about $350,000 if rates don't drop, which honestly, they probably will. That will compress cap rates a little bit. You'll get a little higher valuation. You can probably pretty safely say, hey, if you put in 241, I can buy you out with like a 20% kicker as well. So I can be like, hey, you get an 8% preferred return. And when I return your money, I'll return to you whatever that comes out to. It's going to be 280-ish, I believe. 241 times 1.2. 289. My original partner, Cody, would have got that right immediately. But you're not even giving them all of the cash out refi. Like you're not maxing a cash out refi at 70% LTV. In fact, you're about 70% loan to value on a cash out refi on today's numbers. You can give them 120% of their money back at the end of the term after they've held for, get averaging like a 15% cash on cash return. They're almost, I can guarantee you they're going to pitch you at the end of this. They're like, what if you didn't buy me out? Um, I would want to stay in that deal as long as possible. That's a crazy return. And I think it's fair because it's based on, it's 8% and it's the cash flow. I'd give yourself at least a year to start doing the distribution. But on this high cash
Okay.
flow on a deal that has some upside on it, potentially significant upside, um, probably a 5-year option contract to purchase them out at 1.2 to 1.25%. Um, our our projections here don't account for any rent growth, any blessings in the market for the next 5 years. And I think we can all agree we're on the down part of the real estate cycle. Real estate doesn't stay down forever, just like it doesn't stay up forever. It's unlikely that we'll see a crash on top of the crash. It's always possible. But if we're playing the odds, in 5 years, real estate will very likely look better than it looks right now, which means you'll be in a better position than all these projections that say we're going to get no rent growth, no organic appreciation. It's all going to be forced. Realistically, Louisville's probably going to be doing better in 5 years.
Awesome. That sounds good. Okay. Well, I'm gonna keep trying to reach out to this broker and hopefully hopefully it's still available.
I hope so. I like this deal. This has a lot of promise. There's a lot of ways you can structure this. You have enough upside and enough cash flow to have options, which I like.
Awesome. Thank you.
Absolutely. Timothy,
Hey, how's it going?
very good.
Great. I wanted to show you a deal. I actually want to ask you a specific question on it. Share my screen.
Mhm.
Did you see that?
Yes, I do.
All right. So I already put in an offer and they hit me back with a counter.
Okay.
Originally, where is it? Originally, the deal was put on or listed for 1,190,000.
Mm-hmm.
And it's this. It's really not too exciting. You know, it doesn't look that cool. Um, but I try to see if there's an opportunity with it. So yeah, it was originally for 190. I offered 950K. Oh yeah, also this is a seller finance. Um,
Ooh, nice.
offered 950K at 4% interest.
Mm-hmm.
Um, and so they hit me back with their counter of 1,050,000. With a down payment of about 24%.
Okay.
He's actually was interesting is he wanted to keep it at a 4.5 interest rate, fixed rate.
For how
Actually,
many years?
25 years. This is the their actual counter right here.
But a 2-year balloon.
Yeah.
Okay.
So yeah, I wanted to get your feedback on it. They also said they want a $50,000 earnest money deposit. Is that normal?
That's really high.
Right.
For that size transaction, that 1 to 2% is usually average.
Yeah, I remember you
Asking
saying
for
that.
essentially a 5% earnest money deposit? No.
Yeah, that's what I thought.
I would just say no. That's silly. That's too much money to tie into small. I mean, it's not, it's a 7-figure deal, but it barely. That's too much money to tie up for that small of a deal.
Yeah, I mean, and if it were to work, according to my numbers, it'd be like a 12% ROI, which is not crazy.
Mm.
And honestly, the 950 I offered was like kind of not tight, but it was kind of cutting it tight,
Yeah.
or for me actually.
Let's take a look at the math here. But the two biggest red flags for me is like 50,000 is too much to tie up in a deal of that size. But
Right,
more importantly, you have an amazing debt product and you only have 24 months of it, which is nice, but you have to get the deal into a much different place, I'm imagining,
right.
to get the bank financing at that price.
Hmm.
So let's take a look. What do the numbers say?
So at 150, it's actually, it doesn't have a positive debt spread. So it's a negative 0.21%.
Mm-hmm.
Positive ROI, you're cash flowing 1,200, uh, and then the exit, and I kept the, rents, raising the rents conservative. They already have something at 1,400. So I just put everything else at 1,400 because of
Reasonable.
how the property looks.
Mhm.
Though there's some rents in the area that are a little higher, I just try to be a little bit more conservative. And this is what it would look like with those numbers.
Just a little bit.
This is at 1,050,000.
Here is, so you can pull some money out. Here's the problem that I'm seeing though. Plug in like a 7% interest for like, okay, we're gonna go and try to refi this now because it only lasted 2 years. So we're our interest rate at the end of 2 years, we got the rents to where they've proven they can be, but we're right back down to like we have like 5% cash flow.
So after that 24 months, it would be you would have to basically you would go to a different interest rate.
Yeah, well, they only have 2 year financing, right? So you have a balloon. So at the balloon, you have to pay the original loan. So you either do that through writing a check for $800,000.
Right.
You do it through getting a new loan of $800,000, replacing your old loan, or in this case, perhaps a higher loan to get a cash out refinance. Or you sell the property. Those are your only options. Pay it off, sell it, or refinance. Those are the only three. So we hit the end of 2 years. If this is our income in 2 years, which I think is a reasonable projection, we're going to have to do this. We're right around where a bank would look at it, 1.23. We're not too far off if we hit our projection. The problem is,
That spread is negative.
yeah, we're not going to be able to pull any money out of this because if we borrow more money at 7%, that number goes even lower and that DSCR goes down even further. So if we get a new loan for say like $1 million, now we just have more debt service, but we don't have enough cash flow. So on this particular one, we can get it into a conventional bank product if we get the rents up, but it's essentially what we're seeing here is that it's about where the deal would work day one is where you're getting the deal.
Right.
I like the deal if you can keep the loan term like much longer. If you're looking at like a 7 year seller finance note, now you're in a really good spot, especially in Fort Myers, Florida. Um,
Right.
not gonna be it's not gonna be the highest cash flow deal anyone's ever invested in, but you're in a competitive market, high appreciation, high population growth. You have a cash flowing deal. That's gonna be an easy transaction, but 2 years doesn't 2 years at 4.5% doesn't give you enough room to answer question two of underwriting. We have how we're going to own it, which is this proposal. How we're never going to lose it. I see
Yeah.
us getting to the end of this and not having a return for an investor, which is what I'm worried about.
Right. Exactly. So what I want to understand is, uh, again, this might be a dumb question, but so that 24 months,
Hmm.
I thought it was just like a balloon payment and you get to keep the same interest rate, but the interest rate changes after that.
So a balloon payment, that's when your note ends. So your amortization is the schedule. It would pay itself off over 25 years if there was no balloon. So it's going to pay itself enough principal to where in 25 years the note completely pays itself off. So interest plus principal rolls all the way through. Your
Right.
balloon payment is when the debt comes due. So when you get the debt, when the debt's due, you now need to go get new debt. And so if the seller doesn't offer you a new loan at 4.5%, you have to go to the market and find where you can get debt. So that's where you get bank financing, private financing, agency debt, uh, CMBS debt, DSCR debt. There's lots of different loan products, but the average product right now is going for around 7%.
Right.
So if we didn't have a market change, which we're not going to factor forward in a 2 year period, it's way too close. That short-term debt. We don't want to pick this up on short-term debt. 24 months is the one piece of this where it's like, hey, that is going to be a deal breaker.
Yeah. So what does the amortization mean?
Amortization, that is the length of time that it takes for the loan to pay itself off.
I see.
Principal plus interest payments, 25. So on a normal house, it's a 30-year note with a 30-year AM. So that 30-year AM means over the course of 30 years, it pays itself off. So
Mm.
at the end of 30 years, you have a free and clear house if you don't refinance. That's how a normal home loan works. In real estate, we usually have a balloon. So before the end of the amortization, the balloons do. However, we paid it off on that schedule. That is the amortization is your payment schedule of principal plus interest. Your term is how long you have on that note.
Mm. So you would, for something like, for usual like seller finance, how long would your balloon term be?
Minimum of typically minimum of 7, because that's where you get into you're edging on that long-term debt. Ideally 10 to 15 years, which is most of mine. The shortest one I have accepted was early in my career. I did a 3 year, and guess what? It's due in October, and guess what? I have to write a very, very, very small check, but I have to write a small check to refinance it. It didn't, we didn't get any magical blessings in the market in 3 years. I bought it when rates were 5. It went up in value, but the cost of debt went up, so I ended up with I just have a cool building. Um, Inconvenient. I wouldn't do 3 years again. It's frustrating when it comes up on you.
Yeah.
Um, on the next shortest I've done, I did a 4 year, and I did it on a project that was designed to be refinanced. That was the one where we brought the rents from 550 average to we're starting to lease at 1350 now. That deal, I could have got bank financing day one. I took 4 years of 5% interest only with the seller because it was available and it made my deal work a lot better. I can refinance out of it any time. I always could have. That's where I can get a little shorter on the term, is when I have a very clear exit that I'm unbelievably confident that I can execute. Even then, though, they wanted 2 years. I pushed it to 4 years and I was ready to exit that product. On this one, this deal doesn't work without the 4.5% debt.
Right. Yeah, exactly.
And what will happen on a deal like this, when rates go down to 4.5%, a seller like this will want 1.3 million instead of 1.05 million, because suddenly the properties are all worth more. So the key is to get long-term seller finance debt, and then you can refinance whenever the rate drops close to where your rate is. You can get 10-year debt with the bank.
Mm.
But you need that 24 months to be like 7 years. And that's where I start to like this deal.
Yeah. Do you think I should keep negotiating with the guy?
Yeah, I mean, absolutely. Never just stop. Don't be the one to stop negotiating. It would just pain me to be like, hey, there's deals that I could have bought that I just didn't ask a question on, and then someone else bought them. That's silly.
I feel like
Um,
they have to know that, what the state is of it if they were to sell it.
yeah, I would say this works, but we need to do an earnest money of like $20,000, and we need 7 years on the seller financing.
Right. Yeah, because I put 1% for the LOI submitted. So 20,000 would be the most, you think, for the earnest money?
That's the most that would be reasonable. Above 2% on this size thing is I think that's silly.
Why would he ask me for 50,000? Is he just in Philly?
Um, they don't want it to fall out of contract, and so they're trying to make sure that you have a lot of skin in the game, and they want to see your ability to move $50,000.
Interesting. And so that earnest money would come from where?
That would come from you, an investor. If you're Caleb Hummel, off of 2 business credit cards that have a 12-month interest-free period, and then you pay them off after close. Um, not recommending it. I'm just saying it's a way to do it. It can be borrowed, it can be brought in, but on something like this, they want $50,000 within 3 days of execution of the purchase and sale agreement. On this one, I'd be like, I'm not giving you $50,000 without getting to do due diligence on this. Like,
Right.
that's not going to happen.
Right.
What I can do is we can do $5,000 earnest money with an additional $15,000 after we've cleared due diligence. That way, I am committed to the deal, but not before we make sure it's at least feasible.
Right.
That's a lot easier to come up with $5,000, and that gives you plenty of time to be like, hey, who wants to do a deal in Fort Myers, Florida? And you
Right.
can get someone to come in with the other 15, and now your money. That's the easiest way to do this.
Yeah. Do you think a 24% down payment is reasonable? What they're asking for?
Yeah, that's fine for seller financing. I would like to see it lower, but that's not unreasonable. That's fine.
All
Because
right.
a bank's gonna want a bank would want 20 to 25% down anyway. So it's about a bank's level of down payment, but at a way better than bank interest. But more important than anything, like way more important than the earnest money, I would negotiate around that balloon. You need to figure out that balloon. That doesn't work.
Right. Yeah. Okay. So 7 month at least.
Mhm.
Definitely got to bring down the earnest money. I honestly want to come in lower than $1,050,000 too. So
Yeah,
should
it's okay to just take their counter and say, hey, I'm actually stuck where I was originally. Like this is what we have to do.
Yeah,
But this is my best and final offer, and that's fine.
yeah,
I think you move on, and what tends to happen is if they don't get another buyer on this, they'll call you in a few months and they'll say, hey, does that offer still stand? And then you buy it.
yeah.
It's not uncommon.
What's interesting about this one is this one out of all the offers I put in, he came back to me more, you know, quicker than everybody else. But
Yeah.
all right, sounds good, man. Appreciate
Yeah.
you.
Yeah. This one's not far off, but it does have some critical pieces that need to be negotiated.
All right.
Steven.
Hello, everybody. How you doing, Christian?
Doing well, doing well.
So here's the deal. That 140 unit that I was working on in North Carolina, finally the agent, I reached out to him this morning and asked, hey, any feedback on the LOI? And he said, we set up a time. He never answered. So I said, hey, give me a call when you get a moment today so I can figure out what's going on. So I got more information. I finally got a hold of him, got more information from him. Evidently, the two owners of the property are fighting with each other. So I made a set, they said that they would do seller finance. So I did a price of 2.1 at 4% and 4.5% interest. And one of them wants to accept the seller finance. The other one wants to do a conventional thing.
Mhm.
So they're battling. They're going to have to figure out what's going on. But the broker said one of the one that would accept the seller finance, he doesn't actually want to sell the property. He would like to keep the property. And the broker said, would you become partners with him? And yeah, with a lot of hemming and hawing. And I'm sitting there thinking, I'd be willing to talk to him, but the problem is they've had the thing for listed for over 3 years. They haven't done any work to it. How's that going to work? So I'm pretty sure I'm going to ask your opinion, but my opinion is I don't want to be a partner with somebody that really is just sitting on their hands and butt and not doing any work trying to get this up to market conditions.
Yeah, I would generally agree with that. Yeah, partnership's is a big commitment. And so if the property is not performing the way that it is supposed to be currently, I'm really slow to partner with them unless it turns out it's like, hey, my partner is holding us back. So I know we have a few hands up and I want to try to get through things. Unfortunately, a very sick little baby today, and so I'm going to try to get to him here at a reasonable hour, but this is worth telling the story. Um, the reason the Robin Hood thing came up is the note holder, who is my top three least favorite people I've ever met. I do not like him. I'm so excited that he's like, hey, I want to sell this note to someone. He is selling the note, and by he's just a terrible person. They're racist. Which is the number one reason I don't like them. The email that we had for the Robin Hood Village Resort had to be deleted because of the amount of not safe for work material being emailed to their business email. I don't like them. I was so excited when they said, "Hey, someone wants to buy the note," and it's Taylor who owns the resort down the street. Strategic partners. That is a great strategic. The other note buyer, he is a great strategic partner. Our visions line up. I have to sign off on that. We're working on a ton of projects together, and we're going to share the waterfront of the Robin Hood Village Resort. So his resort likes our calm water. He's putting an RV on the front of my resort land that we share. Partnering, you guys need to be aligned on vision. If you talk to him and he's like, hey, my partner wanted to do this. This is why the property's here. Here's my vision. If you guys align, could be amazing. But man, if you're like if he wants to run it the way he has been and you have a different vision, I don't think the partnership's going to work because he's not going to want to give up control of stuff is what you're going to run into.
Well, that's my problem. I'm figuring, I'm coming up with close to $950,000 in down payment and closing costs and renovation reserves. And what's he bringing to the thing other than equity? And how do you structure something like that at that point? Because if say for instance we agree on a $2.1 million price, do we go out completely? Do I buy both of them out with that 2.1 and then he comes in as a partner? Or how would something like that get structured?
It depends on what. I hate that the answer is always it depends. It does depend. It depends on what he wants to do. Cleanest and simplest, you do a MIPA, membership interest purchase agreement. You just buy into the LLC and it's rolling and you're a new member. I do those all the time. Very, very I've had that happen many times. I have investors who want to work with me. They have some cash. I have an investor who says, "Hey, I had a life event. I need to get bought out." They just trade spots in the LLC. Super common. That's effectively what he'd be doing here. So I don't have a problem with it on paper because I've done it. I've done it 5 times in my career. I've done 5 LLCs. We've swapped members. Very common to do. Members who align in vision and replace someone who wants to be bought out. Normal thing to happen. The other option is you can just recapitalize it and you too can form an entity and maybe bring in another person if you guys want to. But you can form a new entity and go buy the LLC from the existing partnership. They'll usually pay recapture tax when this happens, and he can't 1031 back into his own deal. So it is a taxable event for him. But what it can do is give you guys the ability to get a new debt product. So if his goal was to do a refinance or to pull new debt, sometimes a new partnership can come in and buy from the old partnership. There are reasons why you would do both, but you could structure it as either. You two can form a partnership and buy it from the existing if he has a specific reason to do that where you get more cash into the deal. Otherwise, straight membership purchase agreement, buy into where they're at. They probably have a better debt product on it right now than you're going to get at market. So you might have some advantages.
Well, they have a $638,000 seller finance that they ended up getting when they purchased all of these. So
Nice.
I believe that's their debt product. That's all they have.
I would, so the things I'd want to know, how long do they have on that note?
15 years left.
Ooh, what interest rate?
4.25.
Good news. You're doing a MIPA. You're buying into that. You're going to keep that in place.
Okay.
That is very helpful. I would want to review the note and deed of trust. I just want to make sure that they can allow new members without the seller's approval. And every time I've ever come up to this, the seller's always signed off on it. So sellers should be fine with it, but they may or may not need to sign off on new members entering and exiting.
Okay, so just kind of because my head's kind of filled right now and I'm old and gray matter's getting kind of cobwebby up there. So if I buy into that LLC, basically take the place of the guy that doesn't want to be in the LLC.
Correct.
Okay, so with that, then I'm still going to have to bring in money to come up with the 2.1 million,
Mm-hmm.
right? So
Well, is that the full purchase price?
That's the full purchase price.
So you're only buying out his equity. So what is are they 50-50?
Yeah.
Okay, so you're coming in with exactly half of that to
Okay.
buy him out at a $2.1 million valuation.
Okay. So I'm coming in with half of that money for my half of the partnership,
Exactly.
less the 638,000 if we keep that in place so that we have that long-term debt.
Yeah, you're buying the existing equity position. So you're cashing him out of what he would have got cashed out on with the sale. If you really want to negotiate it, average cost to sell is like 8%. So you go like, hey, it's your existing equity less the 8% in fees that you'd actually incur to sell this on market. Or you can just play it clean and simple, which is what I usually do, and say, hey, your equity is this. If you let me just buy you out at what your equity is, you avoid all of the cost of the sale. It's a great deal for you. You're getting a little bit more cash than you normally would. They owe, you said they owe 600?
638.
38. So based on a $2.1 million purchase price, 2.1 million.
187, 1.875 to finance if you left it right. Was that right? No.
628,000. So there's $1,000,007. There's $1,472,000 in equity. Divide by 2. His equity is worth $736,000 based on a $2.1 million valuation.
Okay, so I gotta come in and pay into the LLC 736K.
Yes.
Okay, and then at that point, I just bring in my reno costs with me as or how do we do that?
Well, if you have a 50-50 partner on this, the two of you bring in the rental cost because you guys are both getting the upside of this.
Okay,
That's so
let's see,
if I'm
that
taking
makes
on a
a lot.
partner, we have a project, so I am buying the equity for 336,000. At this point, that amount of money makes us 50-50 partners. Anything past that, the LLC owes. So you would have your half of the rental budget. He would have to come in with half the rental budget. The other the other partner who is in the LLC.
Is that something that somebody would accept? I mean,
I have accepted it before. I have swapped a partner, and the two of us contributed to take a property. I found that our original math, we thought we can get to 12,000. The deal worked at 12,000. We learned if we do an extra little bit in reno, we could actually get to 14,000 rents. And I was like, well, I want to do the reno. My other partner didn't. I'm like, I found someone who will buy you out and split the difference between what your equity is worth and what it's going to be. They love this deal. You can get a kicker right now on your equity for more than it's currently worth if you would like to exit this deal and take the buyout. They're like, that is epic. I can use that for another project I'm working on. They got bought out, other person bought in. We both contributed. We finished the project. So I've accepted it. It is definitely acceptable. If I had a partner who's holding me back and I got rid of them and someone paid their half to finish the building, could be perfect. He also, you don't know, the guy who you would be considering partner with could also be the reason that everything's held up. You never know.
yeah, but you go 50-50, then how do you make decisions if one says no and I want to go move forward to get, the renos done and he says, no, that's too much money. I don't want to do that right now.
A
Because it
new
says,
operating agreement would need to be drafted.
okay. Okay. Because he definitely, they both don't want to be hands-on with the property. That's why it's fallen into such disrepair. So he would be, pretty much not do anything except contribute.
If he does nothing but contribute, then he is going to have to give operational control to you as the operator as part
Okay,
of this. I
gotcha.
would say, hey, we'll go in 51-49. I automatically outvote you on stuff. Happy for you to write it. Happy to have all of our normal company meetings. But at the end of the day, I need to be able to drive the deal forward, and I need to have decision-making power. That would be what I would do. And that is consistent in all of my deals. I have, for the most part, I'm usually the one who's made more money in real estate. So my whole thing is I cannot afford for you to get in the way of us making money by being wrong. And statistically, I've been right more times than you in real estate. So we're just putting it, it's like a baseball stats card. It's not that I'm better than you. It's not that I'm always right. I value everyone's input. If the decision comes down to one person, it will always be the person who's had the most experience in making money in real estate. That is how I weigh everything. So if they're sitting there being like, well, I have a lot of experience, but I don't want to be involved, it's like, okay, I do want to be involved. We have to hit the vision. I need I need any, you know, I need passivity out of my way so we can make decisions. The beautiful thing with operating agreements is you can negotiate basically anything into them. But
Good.
I would certainly consider it if they want to try that, figure out what everyone wants. And if he doesn't want to be an active participant, he doesn't get to be in the driver's seat because the driver's seat is an active role.
Yeah, he just needs to come up with the additional rental money, right?
Yep. So you guys have to agree on the vision going in. If it's a partnership, you guys need to be headed in the same direction. If you're
Okay.
not, partnership won't work, and that's good to know up front.
Okay. All right. Thank you very much. Very helpful.
Thank you. I've never been asked that question before in 5 years of mentorship. That's I like it a lot. So thank you. Thank you for bringing up a good case study for us.
Thank you.
Mark.
Good afternoon. Thank you for the help as always.
Absolutely.
So, a couple of things. I'm curious, first of all, if you all have a resource around different spots of the country like we do here in San Diego County. Do you mind if I share my screen?
Absolutely. Go for it. I guess
Uh,
the correct answer in English is no, I don't mind.
okay. Trying to figure out. Oh, there we are. Screen share. So, let me know if you can see that table.
I can. Yes.
That is San Diego County, not city, zip code, section 8, rent reasonableness standard. So as a property manager, I just turn to this and try and jack it all the way up to close to that. So is that a common document around the country?
Yes.
Okay,
The beautiful
cool.
thing about HAP standards, the Housing Authority, what does the P stand for? Whatever. Um, your housing standards for housing authority are all listed everywhere. Now, in rent control states, you also have just like a general. Some of them have limits. Most of them just have rent raise limits. But for any rent control or HUD limits, they're always going to be publicly listed, and it can be easily obtained online. If you're having
Nice.
trouble finding them at any time, literally, you can just Google like housing authority standards in this zip code.
Okay, cool.
But if you're having trouble with them, ChatGPT can find them immediately, and it will do it very
Wow,
fast for you.
nice.
Yeah,
So I was
that'll
just
work. This will work nationally.
looking at a La Mesa deal, the one we're kicking around in Fresno. I have the final draft of the PSA, so I might be docu-signing that today or tomorrow.
Ooh, there we go.
So now what's next? And anyway, just salivating over what some of these one bedroom and two bedroom rents could be. And I'm gonna move
Yeah, La
forward.
Mesa's fun. La Mesa, the guy, Caleb grew up in La Mesa. I picked him
Okay.
up there and drove with him to Texas when he moved to Texas.
Oh, nice. All right.
Yes, the lesson there, by the way, was don't let the 20-year-old drive. That was the cross country experience.
My
But
favorite, I
yeah, the La
manage.
Mesa is really cool. That's a super happening place.
I manage in Chula Vista. It's ridiculous what you can get there, but I love it. It's steady income for my land.
I love that they
So
write all the way up to 6 bedrooms on this. That's a big Section 8 house.
true. Yeah. So this is a different San Diego deal. I'm looking at it's listed at 2.375.
I think I'm still seeing the other screen. We might have only shared one specific
Nice.
tab.
Okay, let's see, share. Sorry, I use Teams in my engineering life, not Zoom, so
No,
I'm not
you're
as
fine. You're fine. I'm equally gifted in Teams. I'm like, uh-oh, where am I? So I get the switching platforms. Yeah, I do see this one though. San Diego,
okay.
1,055,000.
That's just my price based on like your comment earlier about being close to 1% rents. I do like
Perfect.
that. I'm been investing forever, single family wise, so I like that. They're asking 2.375 on this 8 unit, but
Woo.
it's completely vacant. And I haven't reached out yet to find out why are all 8 units vacant when they're trying to sell it. How would you approach it? They have something that's definitely commercial lending with it's not going to work other than a bridge loan, so I'm going to pursue it with seller financing.
Yep.
I
Seller
know I
finance would
can.
be a good way to go after this. That is my number one most obvious question the broker is expecting you to ask. They're selling it without filling it. They're missing out on an upside. Why is there a reason that they're selling it vacant? That is the number one question that I want to know here.
Okay.
Um,
So yeah, it'll be the first thing I ask, and it's owner that's had it since the 90s, free and clear, so he'd have the ability to do seller financing on it if he wants to or not. It's different, I guess. But what do you think of coming in at 1.5, which is basically 1% rents for what the rents total out to? I'm still up from,
Well, I like that. So that's where we think our rents are gonna wind up.
yeah, still, I just rounded off from that number, basically, on a purchase
I mean,
price.
if you got that deal. So the first thing I would do on this is I would ask on the seller finance note, the payments don't start for a few months. If you're doing a lease up, we'll buy it at this price. We're good to go. We just need a little bit of break with the payments. We call that a Hummel hack. That was how Caleb structured his first 3 deals. I really like that method for this because there's no income. So I'm going to pay the utility expenses and we're going to be getting these things online. Based on these numbers, cash flowing 9% in California is really good. Very high appreciation market.
Yeah.
Also, very solid DSCR, which isn't surprising because the debt service is based on 5%. But I do know that if we went to a bank loan after this, we're probably going to look fine. If we tossed in 7 where that 5% is for loan interest
Okay.
rate, what does that do to our DSCR? It'll of course lower our cash flow a bit, but we're 1.9, so this is pretty good. Bank may lend at around 1.2. They might want 1.25,
Yeah.
but we're really close to a conventionally bankable property. And if we can hold this in seller financing for a few years, it puts us in a really safe place in a very high appreciation area.
So,
Because it is California, I'm a little bit more flexible on cash flow because we just go into California knowing inherently there is more value in holding property there because it appreciates faster. You
okay.
expect a little lower, tighter return there. All of your investors will know the same thing. They expect lower cash flow on the front end. Rents will go up consistently. I love that it's vacant for the lease up because you're not fighting rent control. There is no rent there. There's no you are unmitigated in what you can attempt to pull off. So there's actually a lot of things about this that I do like. This seems pretty safe if they
Well, other than I'm 800,000 below their asking price.
yes, they would of course have to accept it. But I do agree with your analysis of this is right around where it works.
Okay. So if I programmed in taxes and some other things, if I asked for seller financing at 5, I look like that, which I don't want to do at that
I
price.
wouldn't do that either.
So for me, this is just Rentometer rents. Where do you like to go beyond Rentometer, Zillow, et cetera?
Gosh, Rentometer is gonna be really good in a highly populated area too. So I really like what Rentometer probably has is about right. Um, there's a few different sites. I know you can do like Rent Cafe and what have you, but I like looking at Rentometer for where rents were because it's all rent comps. That means recently rented. And then I'll look for asking rent, which is going to be on like apartments.com is probably my favorite.
Okay.
Um, I did work for them for a long time, but their business model gives them really good data. What apartments.com did that was so genius. Andy Florence, who is his favorite business person is Ray Kroc. He's very similar personality, very eccentric, way too competitive. He bought apartments.com and that generates like $2 billion a year. But he bought it not for the money. He bought it so that every property manager in the country has to input their actual asking data so that it feeds the CoStar data. They have 2,000 researchers who call all over the country, secret shopping apartments, calling property managers, researching stuff. And then they got everyone in the United States to input their own data into the platform. It's unbelievably genius.
Okay.
Because of this, though, they're a data company first and a listing site second. So apartments.com, I like their data because I understand their business model and why their data is so good. They're making billions and billions of dollars by having good data. So I look at that site first for rent comps every single time, remembering that's asking rent, not actual rent. So that doesn't necessarily account for any concessions they make or negotiation. It's usually a little bit less than apartment.com is market. rentometer is about where market was recently. So whatever the delta is between those two is usually the closest thing to correct.
Well, and I could throw Section 8 and get more out of it, but I want something I'd present to them for why I'm coming in at this price.
Exactly. And Section 8 wants you to be, they typically want you just to be able to justify that price, and it's not too hard to do. But I'll come in and I do still provide, even when they offer a maximum rent they'll do, I'll still submit rent comps to Section 8 when I'm first reaching out to them of here's my property, here's what we're looking to do. Here's why we're looking for the maximum pricing is because realistically, we do believe in this area, one bedroom should be going for 1,900, and this is why. And so I'll provide some reasonable comps on the high end, making my case for why they're going to pay the maximum.
Okay. So other parts of this, just it's thinking if I lower their price to where I was originally putting it, still go for the throat on terms or leave them something to like about it?
I think on this one we have to go for the third on price. I think this is the most that we can pay for what you originally put was I think the most we can pay for what it makes.
I just meant here, like
Oh,
I
and the
was looking
terms?
at 3% would be nice,
Oh, 30% would be insane.
something like that. But
It works at
that's how much.
5%. I would ask for 4.5. I don't think if you just rip 800 off the price and ask for super low debt, you're going to get both of them. Unlikely unless they're in a lot of pain. Try
Well, it's
4.5.
vacant, so it's a dead asset to them, and they've
True.
held it forever, so it might even be an estate sale. I don't know that yet.
Yeah. It will depend on the seller's motivation, but if they like need to get rid of it, no harm in tossing the 3%, let them counter.
Okay.
If it sounds like, hey, they did some renovations, they're ready to move on from the project, you're probably offering close to 5. But it did work at 5% with your original price. I wouldn't go higher on price for that for a vacant eightplex, just personally.
Okay. And then I embedded in 7,500 a unit for painting a kitchen upgrade. What do you like to use in your Washington places? I imagine that's closest.
For painting a kitchen,
What? No, if I'm all dated and I'm gonna gut everything and do
got
that.
everything. Oh my gosh, it can depend so much on age of building and construction. It varies a lot. On average, if I'm doing a heavy turn where I'm gutting stuff, I can get a lot done for about $7,000. If
Okay.
I'm replacing cabinetry, I'm painting it, I'm putting on the handles I like, I'm redoing appliances. 7 grand gets you a lot of mileage.
Okay. So 7,500 is good. Then I'm using 3% closing cost and just arbitrarily 10,000 for inspection and other stuff. What
hmm
would
I did
you put in?
I was just thinking about I just got the invoice in for this. I just did it was 18 no, it was 19,500 roughly. Um Kitchen, bathroom, replaced the tub, vanities. I redid the flooring to LVP. I kills the walls, the ceilings, everything because it was a smoked in unit. Replaced the kitchen, painted everything, whole apartment, and that came out to like 19 and a half. So they just for a context of it is a big unit. On a 2-bed unit, full renovation, I can still usually keep it under $20,000 if we're going like all out on everything.
I'll just make that 15,000. It's 5 1 beds, 3 2 beds.
Yeah, and that's if you're doing like if you're renovating everything.
There's no interior pictures in the listing, so I'm assuming pretty much the worst, but it's not
Okay.
a premier submarket, so I don't want to over renovate either.
Okay. That's always good to overestimate than underestimate.
So
Purchase
still leaves me to,
purchase price is missing a 0.
oh, thank you.
That does help.
That does, yes. So back to where I was. Still 8.8 with all that capital improvement.
That works.
Yeah. And then good upside with better rents and things like that. All right.
Mhm.
Thank you. So I'm just following your advice mostly, like the La Mesa one, there's an 18 unit in there that's pretty much just own it and start leasing it or managing and leasing it out. It's in my own backyard. So trying to keep one project easy is if I do the Fresno one with the significant rehab.
Perfect.
All right. Thank you.
All right. Houston, and we'll try to move relatively quickly. I'll try to grab Houston and Corey. My wife just told me 5 minutes and then I'll be needed, so I'm gonna try to move relatively swiftly, but I'll do what I can. Houston, you're up.
Hey guys, what's going on? Christian, can you guys hear me?
Yes, can.
Okay, fantastic. I texted you a couple deals, but I have blind screenshots of them. I didn't know which one was the one I wanted to show you. It's Dakota E51 East Dakota. I just texted. I think it's that middle photo I sent you.
Okay, let me see if I can pull that here. I'm looking at the
Eh,
middle one.
Yeah, the middle one.
Yes,
51.
and so I'm just looking at the analysis tab for that one.
That's all I was able to get a screenshot of my
No problem.
WhatsApp. It's kind of
That's
not
Dakota
working.
Avenue. That's Fresno. Got it. Got it. Okay. So day one analysis is cash flowing 6.64%. I can't see all the inputs, so I can't weigh in on everything here. But your market cap rate's probably not a 624% cap rate. But outside of this, DSCR is making sense. This deal looks reasonable day one. What does that deal look like on future days? Do we happen to have a what the upside is on that?
I do not. Do
Okay.
not.
Um, need a few more inputs. Based on what I'm seeing here, though, this looks like again, Fresno, California. This looks like a very buyable number for day one, as long as there's some upside to improve on this.
Gotcha. Okay. Yeah, it's a 26 unit, I believe.
26 unit, cash flowing about $5,000 a month on a $872,000 investment. That would, I mean, this would make sense. This would be a little bit on the tight side, but this would be a bankable deal at 25% LTV, which is reasonable. This should be a doable deal. What I would need to see is where it's at and where it's headed. But if your numbers are right here, this looks like you're in the purchasable range, as long as there's some upside.
Okay. Okay. I found another Fresno one that's like 3,800 something around that. I was curious about do we have a template for LOIs that you prefer we use?
I put an example LOI in the course. It should be in the downloadables.
Okay.
Honestly, you can fill out a basic one on Google. They're so basic. There's nothing fancy about LOIs. You can get really
Okay, cool.
technical if you want to, but generally speaking, unless you're getting technical with a lot of creative finance, it's pretty much price, terms, interest rate, earnest money, close date. That you can just kind of fill it out. If you went to like Google and went like sample LOI, they're non-binding documents that everyone signs. So you can pretty much fill in the blank on them, unless you're getting super creative, in which case I'll just go ahead and get it drafted by the broker.
Understood.
But I usually
Okay.
have my broker write my LOIs anyway, and then I just read them and sign them if they're correct. I do
So
review.
I should just oh sorry. What were you saying?
No, it's like just I do review them, but I pretty much have my broker write it up and then review and sign.
Okay. Okay. So I should just kind of give him like the easy terms and have him submit the LOI.
Yep, that's typically what I do. Is like, hey, let's get this written up and signed around. Since the broker usually sends everything for signing anyway.
Signed around. Is that a phrase I should use to sound intelligent in this case?
Yeah, you can absolutely use that. That's normal industry jargon of it. When it's all signed around, it's all agreed upon. So mutual, under contract, signed around, all synonyms.
Okay, cool. All right, Christian. Thank you so much.
Yeah, absolutely. Corey.
Oh, can you hear me?
Oh, there we go. Gotcha.
All right, sorry about that.
No problem.
Okay, let me go ahead and share. Okay. Can you see that there?
Yes, I can.
Okay. Um, okay, so I spoke to the broker on this one, and she just sent me the financials right before the call here.
Mhm.
Um, the unit itself is a lot of it. I don't think all of them are freshly renovated, but I know a lot of them are.
These look really clean. That looks similar to I just did a bunch of my Stephenville units with that like light gray and black and white kitchens. Very, 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 very similar to this. This looks almost identical to this actually looks identical to a lot of my units.
Yeah, so I mean I like it. Yeah, I think it looks good. The outside could use a little bit of curb appeal, but overall I think everything looks good on it.
Yeah, I would agree.
She said the owner here, she bought this for 900,000, put 200,000 in it, so she's in it for 1.1. So
Mhm.
there's not, she said she's really not willing to budge on the price. She said she could maybe go down 50,000, but um, I don't know if that's really going to make much of a difference. I mean, a little bit, but so oops, here's the numbers that they sent. Now, I don't know if, and they sent me numbers for another property as well. I don't know if both of these property owners just don't keep very good books, or it's actually not this owner. I'm sorry, it's not this broker who sent me the numbers. It's somebody she works with because she's been on the road, and so she just had somebody send me the numbers real fast. So this is what we're looking at. The tenants are paying 950. They pay all their own utilities. They didn't give me anything for the property taxes.
Mhm.
And it's everything's they're all 12 units are rented out, so I didn't factor any vacancy for the day one numbers. But this is where it starts out. 8%. It's over 1.25 DSCR. I think that's looking good for day one.
Mhm.
And then on the exit inputs, I just guessed. I don't know if those property taxes are anywhere near accurate. I just threw some stuff in there, put in a little bit of money for landscaping. Um, and then for the exit, it goes up a little bit. I increased the rents to 1180 because that's what it is for Section 8 for 2 bedroom in this area.
Mhm.
But even then, there's really not much growth going on, so there's not a whole lot to cash somebody out.
Yeah.
There's not really enough. So I don't know.
I
Um,
think I think what happened on this deal is that she overpaid by a little bit, and she wants to get a little bit of profit for overpay, or for like she probably paid fine, but she overpaid for the
renovated maybe.
improvements.
Well, she wants to 1031 this into property in Washington. So
Oh wow, I never hear that.
so there's really, and it doesn't seem like she's owned it for very long, so I don't think there's much room for any creativity here. But
Mhm.
I just wanted to kind of get your thoughts, see if you think if there's anything here or not.
My instinct is no. I feel like she's overextended her money in this one, and she's trying to pull it back out and roll it into another state. I don't. It's not that it's a terrible deal, but there's not enough to get a return to an investor.
Yeah,
There's solid cash flow.
agreed.
To me, this looks like a pretty good 1031 target where I'm like, okay, I'm paying about what it's worth. It's a good place to park. It's cash flowing day one. I would look at doing a deal like that. But that's if I was taking my 1031 and parking it somewhere that was cash flowing day one in an area I liked. Um, I don't see enough room for investor capital on it is the one thing I'm running into.
Okay, that was kind of my thought as well, that there's just not enough there to pay an investor. So
Yeah,
okay.
that is my one concern.
Can I show you this other one real quick? It'll be fast, just like this last one.
Yeah, let's take a look.
Okay, so they don't have any pictures on the inside. All they have are these pictures on the outside.
Mhm.
Obviously these pictures are kind of old. I don't know exactly when, but this has been, it says 90 days. I think for some reason I'm thinking it's been on the market longer than that. Um, but I spoke with her about this one. This is the one I was asking you about if the property manager was slowing things down, would you keep them? So anyway, the property manager has been holding this back from being sold. Again, not a whole lot of financials on this one. I put in what they gave me for the day one. Of course, it's going to show that it's cash flowing a lot because there's a lot of stuff missing. So I went in here and just kind of put in where I thought it would be. And then on the exit, it's cash flowing again. It's kind of thin, but if we do Section 8 pricing, this is so here's they have two tenants who are paying $600 a month. They've been there for 10 plus years and they're on a month to month. But then they've got three at Section 8. I really don't even know if this is a two bedroom. I'm assuming because the one bedroom Section 8 for this area is not this high, the 1100. So I'm assuming that these are two bedrooms. The two bedroom is 1200 right now. So if we put that up to that, then it looks better. The cash flow is good, but there's still, as far as like the refinance, it's a little bit thin to pay somebody back on the back end there.
Yeah. This one's better. I like this one a lot better. With that much cash flow, if you can get that high cash flow, what you're looking for is a longer term partnership, to where they're getting their return primarily through cash flow as opposed to the buyout.
Okay.
And so I know you can't quite pull their original capital out, but if you on this deal, so you get to cash flowing 20% in 5 years, 100% of the original money is back out of the deal. So if they got their money back after getting all their money back, they still doubled their money in 5 years, right? So there's still a
Sure.
path to get a return. There's enough cash flow here, but it's not like it's a screaming deal. It's a deal that would probably work because there's enough cash flow. Longer term partnership. This would be someone who probably wants to do multiple deals with you, wants to keep expanding, and is trying to set their base on cash flow. People who invest with me on deals like this are usually like, hey, I want to do 4 deals together. I'm looking for, trying to get significant cash flow. And they're usually the people who are like, hey, I'm just trying to place my existing money to retire myself. I'm looking to park money and I don't want to move it. I don't want to get cashed out. That's probably what you're looking at on a higher cash flow deal like this.
Okay. Okay. Well, that was all I had. Thank you.
Perfect. All right. Everyone, this was a good and long call, which is fine. That means you guys found lots of deals, which is the goal. I know like 5 weeks ago we had a random call where there was like 2 deals. I was like, how's that happen? This is what I want to see. This is good stuff. Some of these deals are close. Some of these things are going under contract. I'm very excited for this. I hope this was educational for everyone. As I mentioned in every call, if you need to text me for anything, my number is the Zoom code. It's 425-336-9332. It's the last 10 digits of the Zoom code. Thursday's call will be the math day. We're going to run over cash on cash return, which is the simplest. We're going to run over DSCR. We're going to go over the deals cap rate and the market cap rate and which ones matter and why they matter. That will also cover valuation of the property. We'll talk about loan factor rate and why I use it, and why it's included in our calculations, what it's for, and what it means for you in creative finance. That will be the focus of that. I'm going to try to put together an entire presentation where we actually go through slide by slide. So I'm going to do it almost like a webinar style thing. Just for people who want to learn a little differently, I've put together a bunch of examples. It just seems to be a different flow that I'm going to try. But I think it's going to be easy to absorb. It's going to be, that's the goal. But get ready to ask questions for it. If you guys have got stuck anywhere on the analysis terms of what we're looking for a deal, my goal is that we'll get everyone through the math really effectively on that call. So if that's something you guys are looking for, that'll be Thursday's call, and I'll see you guys all there.
Thanks, Christian.
Absolutely.